Hey guys, Tony here. Welcome back. On Thursday morning, April 25th, IMAX reported their Q1 earnings beating industry estimates. And if you are invested in the entertainment industry, I think it is critical for you to keep up with all market participants. In this video, we're going to talk about those earnings very briefly. We're going to talk about my dashboard and why I have IMAX rated green across the board. And we'll touch on why analysts have IMAX rated a buy. Let's get right into the information. As we have been discussing here on the channel, and as we have heard from the CEOs of IMAX, Cinemark, and AMC over the last 6 to 9 months, the actors and writers strike in 2023 was going to affect Q1 and Q2 at a minimum of 2024. But despite the impact of that strike on Q1 box office revenues, IMAX still pulled out a beat on Q1 earnings. Q1 2024 global box office for IMAX films came in at $261 million, the third highest ever Q1 in the history of IMAX films. Compare that though to Q1 2023, it is a little bit lower, $273 million. Revenue for IMAX itself came in at $79 million for Q1 2024 compared to $86 million in Q1 2023. The GAAP net income though is where IMAX pulled a beat with $3.3 million exceeding the net income for Q1 2023, which was only $2.5 million. So hats off to IMAX for pulling out a win in Q1. Earnings per share came in at 6 cents for Q1 2024 compared to 5 cents for Q1 2023. Looking at IMAX's balance sheet, they do have a very strong balance sheet. Cash and cash equivalents for the quarter came in at $81 million, an increase of about $5 million compared to the previous quarter. Total assets, $824 million versus total liabilities of $490 million. Total shareholders' equity a positive $258 million. They give us a brief overview of their cash and liquidity position. Just to touch on that very quickly, we can see here $81 million in cash. Total credit facilities, that emergency credit card that companies can tap into for IMAX, is $355 million. They did tap into some of that credit facility in Q1, as they said on the call, due to the timing of some of the receipts of the box office revenues. Total amount utilized $69 million, giving them a net credit available of $286 million and total liquidity for the quarter, $367 million. Looking here on the balance sheet, we can see that revolving credit facility listed $68 million, and we can also see that they have long-term debt, convertible notes in the amount of $229 million. Let's talk about that long-term debt very quickly. We see here on the debt maturity ladder, the convertible notes, $231 million, will come due in 2026. That revolving credit facility due in 2027. You can go through their 10Q and get all of the details of the convertible notes, or you could go back to 2021 when they issued those convertible notes back when things were really slow, and look up the details of the conversion price and the conversion rate. But they sum it up nicely for us here in the footnotes of this slide. It says here the convertible notes will mature April 1st, 2026, unless earlier repurchased, redeemed, or converted. And in connection with the pricing of the convertible notes and the conversion price, which is just over $37, the company entered into privately negotiated capped call transactions, which will help minimize any potential dilution effects should the price get up there around 37 bucks. That transaction having an initial cap price of $37.27. How these convertible notes will be handled remains to be seen. They're due April 2026. The company does have the ability to redeem them as of April 2024. That date has already passed, but only if the last reported sales price per share exceeds 130% of the conversion price. So it has to be over $37 share price for the company to redeem those notes early. Will they restructure that debt? Will they just wait until 2026 and see if they have enough cash to pay it out? I don't know. We're going to have to keep track of that. In strong quarters, IMAX does have the ability to throw off operating income of $40 to $50 million. So we're going to keep track of that as we move into stronger 2025 for IMAX. Speaking of stronger 2025, IMAX wanted to make sure we knew everything that was on their slate for 2024 and 2025. You can pause this video if you want to read all of the titles here. A fantastic IMAX slate for the entire 2024 season. And we have the 2025 expected slate also. A lot of very strong titles here for IMAX into 2025. And they are super excited about what's coming for 2026 as well. Finishing up the discussion on cash and use of cash, one thing that you can do when you are operationally profitable is use some of that cash to repurchase shares. IMAX has repurchased $175 million worth, or 19% of their shares since 2020. And during the quarter that just finished, Q1 2024, IMAX repurchased an additional 1.2 million shares at an average price of $13.99 per share for a total of $16 million of cash expended to do that share repurchase. When we look at the chart here, you can see this low here in Q1. Fantastic timing on IMAX taking advantage of that drop in their share price to do share repurchases. Now, I know a lot of you are going to say, I sure wish my favorite company would do a share repurchase. And a lot of that, guys, comes down to taking a look at the balance sheet. Is the balance sheet strong or is it weak? Does the company have a positive working capital or a negative working capital position? When you have a strong balance sheet, when you have positive shareholders' equity, when you have an excess of cash and you're not in a working capital deficit, then you can do things like what IMAX is doing and do a share repurchase. So if you are wondering when your favorite company might be doing share repurchases, it is critical that you understand their balance sheet and take a look at their working capital position. If they have negative working capital or an upside down balance sheet, their first priority is not going to be share repurchases. It is going to be first repair the balance sheet. When a company is dealing with operational losses on their income statement and they have negative working capital, the prudent thing to do with cash is to fix the balance sheet, reduce debt, not repurchase shares. IMAX management guidance for 2024 is similar in box office to 2023. Thank you, actors and writers strike. Yes, 2024 is mostly going to be a year of standing in place thanks to those strikes. Similar to 2023, around 1.06 billion. New installations of IMAX, 120 to 150 expected, and total consolidated adjusted EBITDA margin expected to come in the high 30% range, similar to 2023. A quick look at my dashboard here, just a pictorial representation of what Wall Street is looking at, or what a financial analyst would look at to determine if IMAX is a safe company to invest in. They are profitable. They have increasing earnings momentum. The return on equity, 9.6%, trailing 12 months. Cash position is fine, and the company is profitable. Debt to equity ratio, 1.15. The working capital ratio, 1.85. Revenue growth rate, trailing 12 months, was 25%, although I think we can expect that this year is going to be flat, again, thanks to the actors and writers strike. I have dilution risk minimal. In fact, they're doing share buybacks, but we do need to keep in mind those convertible notes. CEO and management is executing on all 8 cylinders at IMAX. The short interest is low, only 6.67%. The shorts want nothing to do with a company that is profitable and has a strong balance sheet. I have dividends marked as yellow because IMAX does not pay dividends, and there is no history of insider trading recently in IMAX that gives me any concern. There are 9 analysts covering IMAX, and due to the strength of IMAX's performance and the safety of their balance sheet, these analysts have IMAX marked as a buy with an average price target, including updates in the past couple days, of around $22, $21.67 to be exact. If that price target comes to fruition over the next 12 months, that gives you a potential 28% upside if you were to buy IMAX at its current price today of $17.15. Many people might ask themselves, what makes IMAX so special? Why are they doing so well when other companies in the entertainment industry are struggling? And the reason for that has a lot to do with the way IMAX is structured. They are not out there paying for a bunch of theater leases. And as they note here in their slide, they are largely insulated from potential industry consolidation. People want to go to the premium large format screens. And even if the industry consolidates, IMAX is still going to be there and people are still going to go watch films in IMAX. In addition, Hollywood is beating down the doors of IMAX to use their equipment and present films in IMAX content. In fact, on the call, the IMAX executives say they turned down a lot of potential movies that don't fit the IMAX criteria. Just a reminder to wrap up, if you're not familiar with how IMAX generates their income, they have 4 primary categories: IMAX DMR, which is the digital remastering of film. So when Hollywood shoots a film in IMAX, IMAX digitally remasters that film into the IMAX format. The IMAX Theater Systems, number 2, in which they sell or lease premium IMAX theater systems to exhibitors, to movie theater companies. IMAX Maintenance, so they have maintenance contracts with these theater companies to maintain the IMAX systems. The 4th category, new business initiatives, being that IMAX is constantly looking at new ways to expand their IMAX content. That's going to wrap it up for this summary of IMAX Q1 2024. Let me know down below if you have any comments or questions. Be sure and join me live here on the channel for upcoming coverage of the earnings calls for Cinemark on May 2nd and AMC on May 8th. We will listen live to the executive presentations of these other 2 entertainment companies and hear analyst questions for management. I look forward to seeing you on those live streams. Thank you for your attention today. Hope you found this informative. I am Tony Denaro, and I will see you on the next video.